This is Dan Howe, PTI Securities and Futures for your market wrap-up for Thursday, 8/4. Overnight, markets were down both in Asia and in Europe. The real worry overnight was that Southern Europe is continuing to have debt issues, especially Italy. Fundamental news before the opening, the earnings were mixed. Southwest was a little bit down, GM was a little bit up. The jobless claims actually came in right as expected, so our fundamental news really wasn't that bad. But the real worry is Europe and tomorrow's unemployment number. Hugely bad day for the Dow. The SPX closed down 60 to 1200. Dow closed down 512. The NASDAQ closed down 136. The 10-year note, however, yield went down substantially because people are just flying money into bonds. The 10-year yield is now 2.45%, and as a little ago is 7.27. At the end of last month, it was 3%. So this has been a huge amount of money flowing out of the stock market into bonds. The dollar index closed up $1.72 to 75.17. Some interesting things happened during the course of the day. We actually read a news story. The Bank of New York Mellon is actually going to charge large cash holders for holding their cash. Keep in mind, they're now going to charge you to hold your cash. The good news is the little guys, they won't charge it. They'll just not pay any interest. Could this be a reason for everybody running to the bonds? It could very well be, because as long as you don't lose money in the bonds, you won't get charged to have your money in the bank. It was a very busy day for PTI Securities because a lot of things to do in our program work today. Obviously, those of you who are in the program have been a little bit disappointed when the market moved up because we had in-the-money calls. Well, they came in real handy the last couple of days. As calls that were $6 and $7 are now we're buying in for pennies today. So we bought calls in the SPX, the IWM, XLE, pretty much all the major indexes. Some of the smaller indexes like MOO, the agricultural index, and some of the sector ETFs, we were able to put on calendar spreads in a ratio. We were able to buy a September and sell 2 of the August. So if this does decide to come back tomorrow, those people could be in very good situations because the volatility will probably drop and the market will start advancing. That's kind of a wish that the market stops going down, but tomorrow morning is the big number. It's the employment report, and we're looking for 75,000 to 100,000 jobs. The anticipation, if it comes in anywhere near that, it should be positive based on these sell-offs, but you never know. Today it was really ugly on the close. The vast majority of the selling was probably due to margin calls for people who aren't in protected strategies. Hopefully that won't continue tomorrow. This is Dan Howe, PTI Securities and Futures.